Recording in progress.
Now, if you look at the daily time frame, you see like the SPY was up for 8 straight days. You see the number 8 right there? So the swings that it counts each day. Each day when you make a higher high, right? See all these highs right there from the previous days. So it was up for 8 straight days, you know? And Q's was up for six. This is why that's what I was saying before. The SPY ended up making a new all-time high. Q's didn't. You see, it's kind of like it took a pause right there. And this is a disaster. Look what is going on here in the small caps. Nothing. Look what it's been doing from the last, what, 3, 6, 8, 7, 8 days. It's just full chop. 3, 6, 7, 8, like almost 9. 3, 6, 9. That's 9 days. 9 days. That's what, almost 2 weeks. you know? I mean, this was the first week that we actually had a full trading week. If you count the previous weeks, it was all a short week of trading because we're all losing one day on the President Day, whatever the inauguration, and then week before, and so we're back to a full time trading. Let's call it this way. But same thing here. See, 8 days. So this bounce, I mean, it's pretty impressive that the market declined for 6 straight weeks, but it just ripped right back up in one single week. You know, what does that tell you? It tells me this that there are buyers sitting, they're buying the weakness. Okay, it clearly tells you that. So all the bearishness and the talk, the crash and this and that, I mean, it doesn't lines up. There are more people are buying the weakness in this market, even the fact they know the market is it's whatever 23, 24 times earnings and this and that, but it just market has upside. They're not, I mean, yes, I mean there are a few days that you see these like 4 straight days of decline here. That's almost like this is the entire week if you look at them. This from here you have five 5 bars here. That makes it 1 week, right? So if you have this kind of a decline, I mean, it clearly tells you that their buyers sit and find, they're buying the weakness because there is nothing bearish about the market that I see either. If the swings are down on on the weekly time frame and a daily time frame, yeah, I would say like, okay, you know what? Yes, we're making lower lows and lower highs. But that's just not the case. I mean, how can you even call this thing a bear structure? Like, look what this is doing. It's doing here. Every day I'm looking at it, I was like, how can you even possibly trade this thing, first of all? 225 low to 227, a 2 point move for the whole day. It doesn't, I mean, it doesn't even have any kind of a body either. It's just all these wicks. None of these candles have any body right there, you see? Big spike here, shit, like it's open closed right there. That's the high, that's the low. So same thing here as well. Well, we all know that these are extreme rallies. Like when the market just literally going up for 8 straight weeks. That's what, almost 2 weeks. If you take one day off here, which was a short week, and a week after that, that's just That's a monster move every single day. So if you look at the price here now from the last 4 days, which was this week, right? So if you take this is the week we just had. Here's your Monday, Tuesday, Wednesday, Thursday, and Friday. So last 4 days is just very narrow range, which is I believe that because of all the Dow 30 earnings are coming out as well as we all know. So I mean the swing is up. Um, this one is up. This one is up. This one is still down. So um, this is the VWAP that I put up here. These pink lines that you see here. This is from the low right there. So we have what 597 as the VWAP. I mean you can see right there from the last previous days how good it held. It held here this day, but this one really didn't come all the way down here. 6,000, 60105 was the low of yesterday. Um, so it's like what 2 3 points. So this IWM is like literally trapped between these two VWAPs. Look at all these lows right there to this. Every time it comes right here to the VWAP, it bounce. Not this day, yesterday. So just 1 point. That's your VWAP sitting here to 225. It closed yesterday at 226. I mean, this is disaster. To be you can't trade this kind of stuff, especially with options. Well, you need more a directional move, not sideways job. Sideways job is just it's brutal. It just I'd rather just buy shares and just wait it out. That's the only thing you could do. Um, Qs are like if you look at a um, the percentage swing, you got a downswing here, went all the way up 6.8, down 4.4, rallied back up 4.4. You see like how market rebounds. That's what I was saying. Is just this is a buyer market. Either you like it or you don't like it. But having different opinions and things like this, just um, that's all good, but it's just not what the actual screen is showing you. You can clearly see that. I mean, there are buyers there, to be honest. This is not a bearish market at all. There's no signs for it. Um, Looking at the wave count, I kind of updated this thing yesterday. Um, I actually took 2 days off from Elliott wave this week, to be honest. I didn't even have this motive wave up. I don't know. I was just doing wave counts, and it takes time. And I mean, I most of the time I update them after the bell anyways. But during the sessions, like sitting and keep changing these labeling is not gonna do any good. Rather just make one simple wave count and just leave it and let that thing work. Um, if just We're just gonna focus here from August low, which is 51.19. Um, we have clear wave one, five smaller waves up in one, down, three down in two, which is to clean near the 50% retracement, went all the way up in third, down in four. So the fourth wave was settled right between 38.2, 50% retracement. That was the 6 weeks of the decline that we were talking about earlier, which is all right here. So this whipsaws that we all experienced, basically, this kind of price action is a nightmare. This is not easy to trade. You know, this is where you make the most money. You always have to remember trends are more directional. This is not a trend, which something shapes like this. Okay, so trend is always going to be directional. Either it's going to be to the downside, it's gonna come down straight like this. So you have this kind of more directional move. The selling pressure, you know, or it's just the VIX spikes, and you have faster pace of a decline. But here is, yeah, it's not easy to label. The label is right. It's called a triple combination. But trading this kind of a price structure is not easy at all. So you coming down here, you're trying to buy the dip to the previous support. And here you're thinking like, okay, yes, I bought a low here. Now I want to see that the price can make a higher high, meaning to take out this high, right? It's not the case. You failed. Then you made another attempt. Then you fail again. You see, basically you're making lower lows and lower highs over and over again. So you count 6 weeks. Now 6 weeks is going to put you out at what? Month and a half, right? Yeah, 4 weeks in 1 month. So this is where some it all depends how you trade and how you size your trade and stuff, but corrections are very subjective, and they're just they're not easy to trade. I mean, you you come down here, you call like, okay, yes, I can make this thing as an ABC, just call it off, something like this, right? So there's always a start for any correction, A, B, and C, and then you go right back up to make a higher high. Correction is over. So, but now this roller coaster is, we we all experienced in January, this last month. So then we rallied for 8 straight days to take out the previous high. So the market is making higher highs and higher lows as we can see it. Okay. So the trend is up, it's not down. Is something is not like this. So what do we make out of this from here? Now the question is, if we this is this is all a five move, I'm sorry, the five-way move. What if this blue five ends here? It's possible. If that's the case, I mean, then we have a correction to go. Now, if we're going to extend this thing out, meaning that we need, a five smaller waves within this one higher degree of five, okay, so then we could look for more upside. So that's where we at, because I'm not going to change this thing and try to point this thing down unless this screen tells me that. I need confirmation from here. Gans Gann swings gives me the confirmation. That's how I adjust those wave counts. Because sitting here changing these goalposts every single day is not gonna. It's not gonna help. You cannot. This is, and I've said this thing many times before as well. This is not a market that you can simply take a one single wave count and put whatever risk that you want to take, and you think like, yes, this trade is gonna play out in my favor. You're gonna have to look at 5, 6 different things just to see like, okay, yes, is this strategy is the only way to go, or should I mix it up and kind of see like what the other side is showing, you know? So when I am looking at trades to place, like, the risk that I'm willing to take, I'm not just relying on Elliott wave alone. I mean, I can make a wave count at any price, any stock. That's not a problem for me. You can give me any blank chart, I can label it for you. It's a piece of cake for me. But looking at again swings, that helps me to say like, okay, and then the RRG, which is a relative rotation graph that I use every single day, is to see if the stock really has the momentum in my favor for me to see if I'm willing to make a bet to the upside. So in this case here, if this rallied was which was 8 days, if this is all of two, if that is the case, then we need five smaller waves to complete this third wave. Then we come back down in four. Then we make a push right back up in five to complete a five-way move. Okay. And then from here, we'll have a three-wave decline back down in four. So the bottom line is that even we had this correction here, which lasted 6 weeks, there will be another one. But it's just a matter of when we're going to find out. But in this case right there, if we leave the wave two down here, then we need to hold this low, which is 59.62. Then we need to make them push back up, meaning that we need to make a higher high, which is above 61.28 all-time high, is to make a push back toward this 127 and 161.8 extension, which is going to be like this one. So, or if this is all of five, we can take this as an a three-way move up in B, and then we'll look for a five-wave decline down in C is to make a case for a flat. So you got 3, 3, 5. Now remember, C wave is an actionary wave. It cannot be a three-way move. C wave always comes down in 5 smaller waves. So it could be a C. We could see if we can do, hang on, this thing is pretty. So we could do, this can be something like this as well. You do W, X, Y. You don't know that. This can, instead of coming down in 5 smaller waves, it could subdivide into a 3 smaller wave. That makes it a complex correction. So the bottom line is that this is where all the money was made. So every time when you see these acceleration gaps right there, you see right there, all these gaps. Every time when you see acceleration gaps day after day, you should know right away, okay, this is a third wave. No second wave or a fourth wave. Fifth can, but it's called like 90% of the time, the acceleration gap days after days always happens in a third wave, because this is going to be this is the longest wave and is going to travel really fast compared to all the other waves. That's why I left third 3 over there. So this is a clear 3, a third wave move to the upside. You don't get acceleration gaps in days after days on any other wave. So just to keep that thing in mind. So so we remember we had a lower weekly bar anyways because of Monday of all these deep seek news and things like this. So this was a decline after 8 days that happened on Monday. Sorry, it was started here because we ended the session here. So we gapped down on Monday. That was right there. And then from Tuesday, Wednesday, Thursday, and Friday, as you can see, we rip all the way back up pretty much until yesterday, all the way here. Didn't make a new high, but then yesterday, then the tariff news came and we backed off. Now, if you look at a price, if you pay attention to only this price structure here, what does it tell you compared to this decline, this decline? I mean, it's okay, but this kind of, you can still, like, if you forget about all these labels and don't have, just look at a blank chart. I mean, it's some sort of a distribution phase. That's what it looks to me. But this is a lot of back and forth price action. If you really look at it, you see. Now, if you compare this anywhere here, you don't see that. Yeah, there is a three-way move here. Here's your five completed waves. Here's your wave two, and then you rallied all the way back up, right? But I don't know. To me, I don't know if this is still a fourth wave. Even the fact that this low right there, we did made a new high right there, but none of the other indexes did except for SPX. Is this still a fourth wave? It is possible because if the other side didn't made any new highs and we're trying to see like, okay, yeah, I mean we're ready to go here. Well, how is this is gonna rally while the all the other ones are just are still sitting down? You see my point? So yesterday, that's what I was thinking. I was like, I mean, I mean, I have everything labeled right, but I really don't want to put an S&P too much ahead of itself compared to the other indexes. It just doesn't make sense. How can you run one side and on the other three sides are just going, completely going sideways? So the point is like, is it some sort of a triangle that can happen? It is possible as well. Fourth, these are nightmares to be. Corrections are very difficult to trade, you know? I mean, can we just do this? This is all of A, this is B, now we're doing this C, then you make another D, then take another E, then you go. It is totally possible. I cannot call this thing yet because I need more price data. You can go sideways for a while. I mean, I understand that you made a we made a new all-time high here. It can be labeled as this. Then you take this something, So there I mean, I'm going to keep those ports on the board. Okay. Um, if I see that queues are, we'll see what happens next week with earnings and things. If I really see the queues are making new highs, then we can look for the upside here because how S&P is going to run without tech? It will not. You know, it's 28, 29% of S&P 500 stocks are all tech. So I don't know. I mean, stay a bit neutral. Um, his first 100 days in the office, all the policies, his new policies, his new tariffs that he's putting on, then how the other countries will respond. That's another debate. He's trying to hit them. I'm pretty sure they're gonna hit him back as well, right? So what is gonna come out over the weekend? I have no idea. But the thing is this, it's nothing new. We all have seen this movie before, okay? Tariffs on Mexico and Canada and China. This is his top three countries that he wants to, he wants to use his tariffs, and then he's going to threat the entire European nations. And it's it's the same story 8 years ago. There's nothing. I was trading back then as well. I mean, market does respond to these tariffs for sure, but I mean, the bottom line is if market, I mean, the point is like if this happens, that doesn't mean the wave count is wrong or is going to change much, you know? My only concern is that if I can count something like this on a 1 hour time frame, which is called 8 swings, okay, 5 waves down, 3 waves up. It's called 8 swings. I will have a very high confidence that this whatever the top is going to be is this that's there. That's how you pick a top and a bottom. Any price structure, you need 8 swings, something like this. That's the low. 5 waves up, 3 down. Then you look for this high for the price to make a higher high. That's where you call confirm this bottom is in. There is nowhere you can tell after counting there's a 5 way move here, 3 down, and you can say like, yeah, this is the bottom. Absolutely not. You need wherever you're gonna have the largest percentage decline, which was this 15%. Okay, unless you don't take out this high right there, this correction always gonna have a big question mark on it. If this was the low, you always have to wait up till here. That's where you confirm. You see, from here, price never retraced below this part. Always stayed up. Every time when you have a largest percentage decline on any chart, any price, doesn't matter, whatever the price you're trading, 10%, 15%, 30%, 40%. Every time when you see a decline like this, that top right there, whenever the price is going to be, well, depends how it travels, okay? You basically looking for this high to, you need to take out this high right there. So there's a lot of people get very excited over a 5 way move like this. That means nothing. I can really make this a five-way move as well. You can count this thing as a one, up and two. Here's your three, down, up and four. Here's your five. This you can make this a five-way move. Does what does that mean? Nothing. You need eight swings. You know, even the fact here as well. So you can count this thing as a five. You can count this thing as a three. But can you count this as a five? No, you cannot. It's a three-way move. Where is your two and where is your four? It is a three-way move. So how can you make a C here or put a three here on a three-way move? You cannot. It has to be a five smaller waves. So yeah, a lot of just some people they get too excited over a five-wave decline. It's just something like this. But this is a correction. So you have three up, three down, three up, and here's your five down to what I see. Just a regular flat. So I don't know, are we gonna go sideways? Because all the policies and things like this, the market is gonna buy some time. And if that's the case, fine. I hope if we could manage to stay below 60-90 price this month, right there. So I did a 61 and a 60-90, 60-90, right? So yeah, we could max out the spread, to be honest. We just need to, as long as we can manage to stay below 60-90. I mean, it's a positive theta play anyways, so that really doesn't, it's not even costing me to hold any of those premiums. I've I was like looking at it yesterday because the premiums are pretty damn cheap. And then kind of volatility kind of spike after that, only on this decline. That really, what do you make out of this? Really nothing. It's just a matter of like, yeah, we got some time. I mean, you have pretty much full month, but the point is like, if this trade can really play out, I mean, the because February is the shortest month. Remember, it's only gonna have it's a 28 days. You take the weekends off as well, so I mean, February is gonna move really fast because it's one of the shortest months of the year. So I mean, we'll see what happens. A trade is a trade. If it plays out, good. If it's not, then we're gonna try to book something and then keep, try to find something else. The point is not like I'm bearish or something. It's with all these tariffs and all that kind of stuff. I think it's good to keep a hedge on a board, and then any weakness comes in on some stock that that I'm watching or something comes along, I can always play the upside. So you can always play both sides. So it's just a matter of like when you take out one position, when you take out and when did you actually close the position. That one matters. What is on the board is there. It's not officially closed yet. So I don't consider that as a loss or something. Things can always turn around. Um, Qs, I didn't really do much. It's the same thing. I mean, they're actually take this thing off. They actually, I actually managed to copy them side by side. If you notice, like there, you see. So the Qs and they match side by side. I really like them. That's how we're supposed to have. You see, oh God, I shrink this. Um, from here, from August low right there. One, two, three, four. You see, they're side by side. But the point now is that we have a new high here, but we didn't make a new high here. See, have a bit of a room to go. So if we go to the Qs, what we can do here? Remember, we still have earnings to go, right? So this 8 days of same triple combo down here, down to 38.2 between this zone. And then from here we had this rally back up, and now the question is if this is all of two. We can do this, put an A here up in V, make a flat. So you can actually make a flat like this. Let me change this thing to red. So you have 5 waves up, 3 waves down, right to this 61.8 between 78.6 and 61.8. So you had this retracement and you rallied back up. Now the question is, I wouldn't really worried about uh, what happened back there. All I will just try to focus here on this price action. What we can make out of um, how we're going to resolve this moving forward. So if we take this decline that we had, 78.6 sitting at 530, and if you notice that we did manage to rally 2-3 points, or we're like literally fighting this area, right? So went up 2 points, back off, went another 2 points, took a huge hit down on last Monday. Then we managed to rally it all the way back up again to 530, backed off again. You see, this is a 78.6. 78.6 is always your last resort. Okay, you break this, you have a 90% chance you're gonna go right, take out this high. This is where the decision gets made. Always at 78.6. So a lot of institutional buyers, sellers, and buyers are gonna fight this area really good. Sellers gonna come to press this thing down. Buyers are willing to see like, okay, yes, we can go and take out this high. So now we're just gonna focus on this to see how we can complete a 5-way move. So need 5 smaller waves to complete the one higher degree fifth wave. Okay, so if we have 5-way moves up, 3 down, now we need this third wave. So if we take the first swing, take this previous swing low, 100% relationship, which is the two equal measured move, is at 544. Now the 544, as long as this low holds, which is 510. So you basically distance travel here in swing one, down in two wave, 100%, which is we call 3 versus 1, is a 544. The ideal retracement of a third wave is always going to be a 161.8. Can it get there? Yes. Can it fail anywhere in between? It is possible. So you don't have to worry about any of that area unless you make a new high first. Okay. So when price is making lower lows and lower highs, so what are you looking for now? You need a higher high and a higher low swing. So from here, you need a higher high because you want to take out this high. This is your resistance. So this is a 100% measured move. if this 510 holds. Okay, so we're gonna leave it that way. So now from here on on this third wave, now we need five smaller waves to complete a third wave. Remember, third is an actionary wave, right? So now we're gonna have to see how we can make a room to the upside to see if we can count five waves, like something like this. Then we come down in four. Then we make a push in five just to complete a five waves. So from here, we can turn this thing into green. I would just get rid of this, clean them up a little bit. We don't need all this. All those lows are there. We can, okay. We have our channel, which is fine. We'll keep the channel as is. We have a downward channel. We don't need them anymore because we already broke above, already cleared that one. So now we're going to focus on how we're going to count five smaller waves within this third wave of five. Okay. Now we can see that we have a lot of rejections here at 530 zone, right? So this is, what does it tell you? That this is a sticky zone because you have too many rejections. Now, from now, we're gonna do is we're gonna label this thing as a support at a 510. We're gonna keep this as is 530, even the fact that we made a new high, which is, sorry, we managed to rally another 2 3 points. So you can mark this. So you can make your upside zone like this. Okay. So you have a double top right there at 533. And you have a 78.6, which is at 530. So this is going to be your zone to watch, along with 530 is your support. So from here, there's a bit of an overlap here. Can we make this thing as a diagonal? No, third is going to be very short. Yeah, so very short. I'm gonna go into a smaller time frame to see. Sometimes 1 hour, you see, no, you cannot really, you cannot really get a very clear read on a 1 hour. Then you gotta go to a smaller time frame to see if you could actually get a five-way move from here. You need, if you have a three-wave decline, you need five. That's a huge. See, you got 1 2 3 4. But look at this. Good. It's right at 200%, which is good, almost to the penny. Fourth wave. But then you need another five smaller waves. You kind of too much overlap. Yeah, counting this five because I know why it's not here yet. Because this. Because the weekly swing is still down. That's the problem. And this price structure here, what this price is doing, um, this, you have several weeks, you see like too many outside bars. This is always scary to put up a outside reversal bar on the top of the chart where you have your all-time high and you end the week with a full outside bar. I mean, this is, I mean, it's considered as a bearish candle, bearish engulfing candle. On again swings, we call an outside reversal bar. Yeah, the next week was the price managed to stay within an it was an inside week, and then it dropped, came, made a new low. Yeah, Qs are kind of back to the count. I wouldn't call this as a one yet, unless we do this, something like this, to actually make some sort of a diagonal or something, because the swing is down, something like this. Then we gotta have something to look for. Because as I said before, like I'm not a very big fan of this price action. It's just too much sideways of price action right there. You know? I mean, if we forget about these labels, that's not the only way we can only trade. I mean, just use this. It's a perfect round bottom. I mean, we could just simply take a pattern of a cup. So if we do that, I mean, we can always label the chart, but it's just a matter of like, do you really want to fight this or just wait for another day or two to see what kind of then you can adjust it that way. But not everything has to be labeled. There's, I know, 20 different other ways to trade the market as well. Elliott is just one of it. But but for now, I would just leave the cues as is. I would just watch this area, 530 to 533, and watch this support for now. We're just gonna watch this zone, okay, and see if Amazon or Google help cues next week to clear this upside. Okay, that's still long. That's what, 521. The futures last night, because they're I believe, yeah, because market closes at 3 on my time, Central Time. Sorry, the Central Time. And then the post market is open until 7 o'clock. I mean, we closed at 521.19 yesterday, as you can see right there. But look where the future closed, 519.46. That's the low right there. So the actual low yesterday was 521.19, right? Look where it closed, 519.46. His market is showing some action. I mean, I don't, because I don't know. It's just because of all these tariffs, So I don't know. We're gonna gap down a little bit more. I mean, that's fine. I mean, but we're just when this price action is just too sideways. you know? It's not something like this, more to the upside where you make, well, it could break higher. I mean, that's the bet that we're willing to make. But at the same time, there's nothing I could say like, yeah, this is a really a bear structure either. I mean, if we really, I mean, I wouldn't, I don't know. Uh, no, it's just, it's not. So I'll just leave it like this. Let's see, 5:30, 5:30. Just watch this for next week. Watch this upper zone right there and 510 support for now. And just leave the way it is. And then at the same time, we're going to keep an eye on this. Okay. See how it resolves. It's a very, I mean, it's a perfect round bottom pattern. Okay, moving on. NVIDIA, a poster child, took a lot of beating this week. Um, this is a daily chart. Um, we're just gonna use the 90 low. Now remember that NVIDIA did made a new all-time high here by a penny or two, but that does consider as a higher yearly bar. Okay, for the year. It's just a matter of like if NVIDIA is willing to take a bit of a breather, it will. Okay. The reason why is, oops, I gotta go, is here. NVIDIA failed after 11th swing. Okay. It had a huge run. You had these are GAN swings, so don't get yourself confused with, I'm showing you two different things. Elliott wave stops at 5 waves. Okay. GAN swings, there's no limit on swings. As long as the prices keep making higher highs and higher lows, the swing continues. Okay, until the swing will turn down, meaning to take out the previous swing low. That's how the swing turns down. So in this case, that's what happened this week. So it was up at 11 swing, and this is where at 126.86 was the low of the 10 swing, and went all the way down to 116. That's why it becomes number one now. So this is the one. Now gonna have a two, then we're gonna have another three. So we got some time to go. I don't think Nvidia is going anywhere in the first quarter. You know why I'm saying this? Because I think the stock just gonna really take a bit of a breather. The stock had a 180% run last year. 180%. Think about it for a second. So if we go back here, just open up, what happened here? Open up a Nvidia chart. Boy. So if we go to, look at the run that Nvidia had last year. From here to here, 223% upside, 2024. I mean, so this year's, I mean, we just only had 1 month, has a 24% decline. Just looking at a blank chart. So we could label this thing like this. If we go back on a bigger time frame, there's nothing, oops, because the stock split, geez. There's nothing bearish about that chart. If we go back all the way down here. So we have wave one, down, up and one, down two, three, four, five. I mean, stock has room to run. This is on a much bigger time frame. It's on a weekly time frame. It has room to run. This is it's just gonna settle here. This is what I see. I think this is a completed five-way move on Nvidia. Yeah, wave one, down in two. This is for $10. You don't have to really go that far, to be honest. This is, you expecting the stock to be down in 10-point range? I don't think so. 140. So we could. This is, to me, this is a completed five-way move. So when you have a completed five-way move, now you need a three-wave decline in your wave two. And then from here, remember, we'll still have room to run. But the question is now is we could look for an extended fifth wave from here by doing this. The reason why I'm willing to play this way is because of the wave one is a shorter wave. So your fifth was going to be an extended wave. So we could count one, two, three, four, and then you look for an extended fifth wave. That's one case. Second case is this, that we can just put five here, make a full five completed wave move, and then we'll look for this green two with this ABC. So it really doesn't matter if we put a two here or we use um, a higher degree two or we use a smaller degree two against the wave four, which is 90 low. So it really does not matter at this point. We need a lot more price data to make a case of a one high that we're really going to have a larger degree second wave decline. I don't see it. The reason why I don't see it because it has a higher yearly bar. So that tells me that the high is gonna get taken out. This is a perfect double top on Nvidia. Okay. So I will leave the key. You see the stock splits, right? You see all this is a split price. This is the nightmare I have to deal with every time when the stock splits on a chart. Um, so I'm gonna keep the fourth wave here. I'm gonna see if we could get a one, two, three out of here. But we could make a case of, again, remember we talked about putting the blue five up here and then we'll look for a second wave, or we will just use this as a leading diagonal instead of an ending diagonal. We can count them both ways, okay? And to see if we can have a three-way move to the downside. When you have a leading diagonal or an ending diagonal, your minimum retracement to the downside always going to be your prior fourth, which is already there at 126.86. Remember, this is where the swing got turned down, right? Because we were at the 11th swing on GAN. So that was the low, was here, right there. You see what happened? Watch this area now. See how Price is struggling now. So when I played that bounce this week with the trade, I set a target here at 125. As you probably know, I told you guys to set up a correct A, B, C, and two. Yes. Yeah, you don't want to have two to trace below the your initial five-way move. Your answer technically is 1 on 145. Yeah, you're gonna break this. You have a very good chance you're gonna come all the way down here. I can assure you that. Yeah, NVIDIA, whatever NVIDIA has to do not to take any big, however this three-way move, however is gonna get resolved, it must hold 1 on 145. That is the line in the sand. Okay. So I played I mean, what we did? 117.85, I believe. Yeah, yeah, that was the entry right there, right around here. That's what I bought them because I ran some swings on an hourly chart. That's why. That was the entry that I took. I remember that right there. And then from here, 125. That's the move that I played from here to here. I knew that Nvidia is always it's gonna try to make a push, but I know it's gonna back off. Yeah, once the direction of the trend, the swing changes to the downside, it's not gonna reverse anytime soon. I'll just tell you that, especially like a daily time frame. No, you have a you have 11 swings to the upside. You're not gonna make one down here and then rip right back up. Yeah, you're gonna choose some time, a lot of time to the downside now after spending that much time to the upside. So for now, you're gonna watch this. Okay, watch the 126. It's a lot of rejection. You see, like when we made a low here. So now what you're gonna do is you're gonna do this. So you have a 116.25 was this week low, and you have 126 upside. Okay, which is a wide range. You can definitely play something in between, but this kind of a back and forth chop is not gonna be easy. So I always have my style of trading is always the way I have my rules that I don't break. That once I will place a trade, like once I will have a trade for a week on one pair, I don't go back into the same trade, you know, meaning that I don't double dip the same trade. If I have a trade open on Monday, if I manage to close something on Wednesday with profit or something, I'm not gonna, doesn't mean I'm gonna jump right back in on Friday or something. I just don't do it. One trade on one stock is good. Just you had a trade play out, move on, find something else. Yeah, I'm not dying to trade this back and forth. I was very confident that price is going to reject here because I was watching this. What did I get with this right here? I laid out this box right there. I was like, oh, Nvidia is a pretty strong company. We are oversold, so we should be able to get a bounce. But you see, like we're just coming right back down. So Nvidia momentum is very weak. It is weak because I can see it on RRG as well on the relative rotation graph. It's struggling. I mean, it's pointing more toward the lagging quadrant now. So there's nothing. I mean, for now, I'll just watch. I'm not gonna jump into Nvidia. I think we just simply, 'cause I think the stock just gonna consolidate in a bit of a range. and just wait for earnings, you know? So I don't think Nvidia is gonna rip anytime soon unless it could make a rebound on earnings. That's the different debate. But until then, no. I don't see any sign. Weaker RRG. This is kind of like those. I don't. This is a paid service. There's go and no go signals. I don't really use them, but sometimes I do kind of keep an eye on them. As a courtesy, they give it to me because they know me pretty well, and so I'm kind of like use them here there just as a hint to see if there's some good ones you can get out of them. There's some of them are, they fail. You see a no go here, then you have a go. This is a failed signal here, then you just gap down. That was the last Monday. That was actual a good signal came a couple days before. Well, then this gap down here was the Monday punishment for Nvidia, so which we all see right there. It all the way. I mean, that's just huge. For this size of a market cap company, this is a massive hit for a one single session. For a 6.5 hour session, for this company to lose this much of a market cap. But I would I would stay a little bit neutral for now. We'll buy. I would buy. Would be my next price if I will get down here to 112. It's the area that I would be really interested in buying. But now, if you pay attention to few things here, um, one thing is let's look at how many times that Nvidia dropped in the same exact range. It's the fourth time so far. So I took the trade. I'm just giving you the reason what I look for, why I enter the trade. I always have my reasons why I'm taking this trade, why I'm putting on money on this particular stock. I was looking at this. I was like, you have two declines here, you have a third decline here, okay? Because swings is called they have a bar to bar relationship. There's a lot of time if a previous swing decline can match identical to your existing downside retracement. So when you have two matching, I mean, it cannot be to the penny, but you can come like really, really close to it. The price will respond. That's what I love swing trading. It eliminates a lot of noise. Okay. And you could really find good swings that you could make bets on, you know? But this is not something all you guys are gonna learn overnight. You're gonna have to spend a lot of time with me for me to slowly kind of like teach you all this. So because there are a variety of swings. There's volatility swing. There's a 3 bar swing. There's a dollar swing. What's the fourth one? There's a percentage swing. So you have a percentage swing, dollar swing, volatility swing, and a 3 bar swing. So these are the four swings. Okay, they're all different. I do all four of them. So, but I'm I'm like, I don't know. I pretty much have like, I would say that probably like 75% of my trades now, they're all swing trades that I've been doing. I know I set my targets, as you all know. I tell you like, hey, set a price alert right there on your chart and just wait. You know, that's that's how I've been trading. I mean, I don't know. I'm pretty surprised. I don't know how in the world that I actually pulled out a month like this. I had like what, 15, 16 winners for the month. I was like, I don't know. Pretty pretty impressive. I mean, there are some losses. This is gonna get added from last month, which was few of the carry-on trades that I had on IWM and diamonds. That was the six weeks of beating. Remember, you just looked at through that pretty much everybody took. So, which is fine. Um, but if I take this month, I mean, we did good. I'm up for the year. I'm not down. So just gotta keep moving. Um, got a lot of work to do. So back to this. I'm trying to see if we could make a five-way move into an A. Okay, if that is the case, we could do it. I mean, this is coming really, really close, but it's still valid. Okay, so we could make this case right there. That will give one more push to the downside here in A. That will have five-wave decline. Then from here, we could play the bounce right back up toward the B wave. Okay. So, well, I don't know where the B wave is gonna, I will run the upside retracement, but we'll see if we will end up doing this first. Okay. And now, what is the downside signs we have? We have a weaker RRG and we have a downswing and we have no-go signals on top of it. You see, they have three different confirmation there for you. So you're not gonna sit here and force one side when the other three sides are telling you like slow down. There's not there is no upside to in play. Okay. So when you try to make a trade or trying to make a decision, you just, as my point was before, was like you don't just simply take one chart and say like, okay, yes, this is what I wanted to bet on. You have to look at other things as well. Well, you don't know all those other things as well because you have to learn, you have to learn all this. So you leave that thing on me. That's my job. So, but, but, like if you have like, okay, I just wanted to adopt Elliott wave as a one strategy. I want to take all my trade based on my wave count. You can do that, but your probability rate on those trades is not going to be that high. Okay. So I'm going to knock on wood, if I'm hitting 16, 17 trades in one single month, well, because I'm looking at three, four different things at the same time, why I'm taking that trade. Because I'm not gonna sit here and throw 5, 6 grand into a trade without just, okay, this is what it is, you know. So I look at all the other sides as well. So I mean, it doesn't mean I'm not gonna be wrong. I will be wrong, but I'll be right more than I can be wrong. I can assure you that. So we will have losses. It's okay. We'll deal with it. But I will have a lot more winners. I'm pretty confident. So we could make, let's say, a case here we could keep because this is a pretty huge move. So this fourth wave can kind of like go sideways, I mean, for now, I mean, doesn't matter how you want to do that. We could kind of go like this, kind of chop around like this, then make a one push, then make a three-way move. This is a bounce that I'm willing to play, and, and this bounce will come into a play when I will see that RRG is trying to improve. Where is that part? Is here. You see? You see the direction of this relative rotation. The momentum is very weak. Okay. The good sign, the positive sign about this, that is getting further away from the benchmark. Okay, which is right there in the center point. So your main benchmark is what? S&P 500, right? So we have a lot of distance now. So when this rotation will turn like Apple did here, that's why we have such a big move on Apple that we just saw. Remember, you're going to make the most money on a trade when you have a better momentum. You need better momentum and you need a more alpha. Alpha is everything. Alpha will pay you. It's going to make you rich. You don't want to fight stocks that are close to a benchmark. This is what the beauty is of this relative rotation graph. It tracks security around the benchmark, how they're performing. They're underperforming, like they're losing momentum here. They gain, they're improving. They're weakening. It shows you everything. This thing has made you guys a lot of money as well for months, because it works. But you cannot just blindly look at, oh, I just want to buy this just because there's a little hook it's forming. You need charts as well. You can't just, how can you buy something like this? You don't even know where you're buying, where are you going to define your risk then? So you need either a wave count, you either need a Gann swing, you need to know like, okay, where my support level is, where my resistance is, things like this. So you got to do all the other side as well. But this comes pretty handy for for you to look at like how is the stock is performing around the benchmark, because remember, every stock you can do a ratio chart as well, will give you the um, same thing. Okay, the ratio chart is basically you just the rotation here the rotation here is more, it has four quadrants, right? It has a leading quadrant, you have a weakening quadrant, you have a lagging quadrant, and you have a improving quadrant. So when you're trying to buy the weakness, you buy in a weakness where? When the security is in the lagging quadrant. So the rotation around the benchmark, which is an S&P 500, is going clockwise. Everything is moving clockwise. It never go opposite. Never go, meaning that it doesn't go anti-clockwise. The rotation will go like this. So this NVIDIA is going to have a pretty strong bounce when this RG is going to start to show, starting to form a hook like this. The same thing we just noticed on Apple. You see how Apple ripped to the upside? Now, what I'm watching, it was what I've been telling you guys as the same thing as well for the last 2 months. Now, these two stocks, for some reason, from the last 2 months, has a very strong correlation. What I mean by that is like I think these two stocks are fighting for the market cap. Okay. If you watch these charts side by side, okay, you're gonna notice Apple declines, Nvidia goes up. Nvidia comes down, Apple starting to rallying. They're working opposite because Nvidia was at the top. Let me see what that thing is. Show you this. Nvidia was up here at number one. Okay, and Apple was number two. Then Microsoft was third. And now the Nvidia took a hit last week on that DeepSeek news. Now it fell right back down to three. So how much is the difference now? It's 3.54 compared to 2.94. You know, so Nvidia went under. Has lost a lot of lost a lot of market cap. It went way under, like little under 3 trillion now. So the point here is what I've been seeing and what I've been watching is that these two stocks has a very strong correlation. I think they're just like fighting for this number one spot. Because as soon as Nvidia becomes number two, Apple was down. Remember, Apple was down like 16, 17% decline Apple just had. iPhone sales going to be slow. All these negative news are coming up. And how's that played out? Apple just ripped right back to 250. All those sell ratings because the China iPhone sales going to be down, this and that. This is, to me, this is not a stock. This is not a stock. This is a treasury bond, to be honest. You know, this is pays dividend. I mean, cannot. I mean, I simply cannot see anybody can go wrong owning Apple. This is like literally a country with its own GDP. You know, this is huge. So that's what I was been noticing. Like every time, like because like we all everybody's watching the video. We all know that. Like Nvidia is rallying, Apple is down. Then Apple goes up, Nvidia is down. I was like, what the heck is going on between these two stocks? So I think the other actor or whatever, I think that guy he noticed the same thing yesterday. I was like been saying this for a few weeks because I've been watching this. Like I don't know why they're fighting. Anyways, this is weak. So yeah, these two right there. I mean, these I don't know if Broadcom reported earnings yet or no. Oh, you don't understand RRG? Well, RRG is, as I said before, is a relative, it stands for relative rotation graph. Okay. There's a lot goes into it. I mean, it's gonna take me hours to go through it. But um okay, so you have let's focus on this part. You have a hook right there. Okay. You have a hook right, which is your Grundy. This little dot right there, one, two, three, and four, and five. These are your 5 previous days. Okay, that's what the dot was. So on Monday, because it updates on the real time. So on Monday, you're gonna have a new hook, then you're gonna have another dot appears right there for Monday. Okay. So what you're watching for is now each tail that you see here with the hook, you have ratio, momentum, angle, distance, heading, velocity, and a quadrant. So this, how the whole concept started is from this guy, Julius de Cantapera or something. His name is the Danish guy, JDK. I will show you who he is. This guy. This is the guy who made RRG. This guy with his buddy right there. Julius de Campinar. I don't know. It's Campinar. Whatever. This guy is in Amsterdam. So after years and years of his research, he's the one who built this. It's called relative rotation graph. It's a unique way to visualize the relative strength and the sector rotation of financial market. So so every time when you see it's gonna have his initial here. So basically that all these softwares who offer relative rotation graph is paying him money for that. because this is all his work. So what you have here is you have different momentum, angle, distance, all that kind of stuff. What are you looking for now? If you, what are we looking for? We're looking for a direction. Okay. So our main benchmark in S&P 500, right? So we're looking for a direction. So how do we look for a direction? We have north here, south here, west here, east here. Okay. So I was gonna, so the north and a south and a west and an east. Let's look as a clock, like a regular clock. Okay. It's probably sticking on your wall right now. So what do we look here? We have a 12 o'clock, a 3 o'clock, 6 o'clock, and 9 o'clock, right? Just look as a clock. So when you look at the angles, we have a north here. Always going to have a 0 degree. Then we're going to have an east here with 90 degree at 3 o'clock. We have a 6 o'clock at 180 degrees. And 9 o'clock is going to have 270 degree. So what are we trying to do? We're trying to find direction. So you have 4 quadrants: leading, weakening, lagging, and improving. So when you're buying a security, because your security, you see like they're rotating around the benchmark. Okay. So how do they move? I'm going to move this slide to the left. You're going to see these dates will change. Let me get rid of this pig here. Keep the mag 7. So now we're going to go back to, let's start the month right there. This is where we end the year, 12/30, right? So let's look at January, the last month. So this is where we end the the year. Now, if you notice that all of these Mag 7 stocks were weakening, Apple was way behind here. And NVIDIA was the only one that is going northeast. Well, I deleted that. Northeast direction. Okay, that's the direction that we're looking for, is northeast. Okay. This is where you're going to find the most alpha. Northeast. So we need to find a rotation which is starting to get momentum, is willing to form a hook pointing toward the northeast direction. Why? Because once the security is in a lagging quadrant, it will go to the improving quadrant, then it will go to a leading quadrant. And we wanted to go here. Okay. This is where we start to take risk off. Because when you have momentum that is losing, Okay, well, your chances are that stock will, you know, will starting to lose momentum now. So one is starting to lose momentum here, it's starting to weakening. When the stocks start to sell off, you 100% your all these all these securities are going to be sitting in a lagging quadrant. When you're going to look at a chart, okay, it's going to show you that. I'm going to show you that. Hang on, let's do this. So each day it goes the next day. So every time I'm going to move this slide to the right side, you'll see the date will change right there. Oh, that's actually we started when and the year. Tesla was way back here. So then January 2. This is 1 day movement to be like if you that's what you see per day. Then how much see how Nvidia went up? Look all the other stocks. See Tesla was look what Netflix did. Netflix was here. Some of them, but they sorry, the Meta. Some of them they do. Some of these rotations are say like when they come back down to the weakening quadrant, they can form a quick hook reversal like this toward the leading quadrant. Like you see, like here. I'm just watching Meta. You can watch the other one day by day. See, you gotta watch this hook. It's very important. Look how's it fighting right there because the earnings are coming. We're just waiting. See how Meta was waiting? Look how it reversed. See how Netflix pop and Meta pop on earnings? Watch Netflix now. Here. There's a lot of time you could find a pretty good direction, like something like this, you know? And what are you looking for now? You want to go like this, right? So does the Microsoft. These are previous days, so don't get confused by yesterday price action. That's all happened days ago. So on Netflix and NetApp. This is where we end the day yesterday, right there. So now the rotation sitting here. So I'm willing to bet on Tesla. Okay. The reason why being is because Tesla is going to make a move back up in the improving quadrant. It's not going backward. So Apple is fine. But this move that Apple just made was pretty impressive reversal. We're gonna wait for this Nvidia now, which is coming down here. This is the wave count that I was showing you to see if where we could find a. I need if Nvidia is trying to show something like this, I will definitely go long Nvidia. So we gotta wait a few more days. So for now, like see I mean stock is gonna take a hit. You see now Microsoft is just too close to the benchmark. I try to avoid this. You need to be further away possible from the benchmark. This is where you're going to find the most alpha. That's what you need, especially when it comes to options. You need a good move on your trade. You're not going to get a very big move on this kind of a stock, which is sitting too close to the benchmark. You need to be away. Okay. You can always calculate distance as well. Um, this is where the rotation is. So now if you look at Tesla, let me just hide everything to do one at a time. Remember, Tesla was coming down this way. So it's right there. So it's going to get out from here. But the only like thing that I really don't like so far is it's kind of, it really doesn't have much distance. Like it would, because you see like how far it was before, and I was really thinking like it's gonna go kind of more this way and then kind of turns around, but it went really close. You see, a buyer sitting on Tesla is the problem. So I'm willing to bet on Tesla, to see if we could get this thing up, and see if we can play this upside from here. But now the question is with Tesla is, I will actually have it, I have it here as well. It's so this daily chart is very range bound. Now, if you noticed here, Tesla from the last 8 days, 1, 2, 3, 4, 5, 6, 7, 8. That's 8 days, right? 8 daily bars. This is the first higher bar Tesla had yesterday after 8 down days. This stock has been making, this is the inside day. This stock has been making pretty much lower lows every single day, all the way down until here. 8 days. It was down for 8 days. Yesterday, it went all the way up to whatever, 420, then kind of backed off on the tariff news. And it just, this only one bar. So Tesla's swing is down, which I know it is down because it's been down for 8 straight days. It needs two more higher bars, meaning that it needs two higher highs. So our first high would be a 420 mark now. So if we make a new high, that will be bar number 2. Then we need to make another third day a higher bar. That will make 3. That will change the swing back to the upside. We need 3 higher highs for the 3 bar swing. Bar will not, the swing will not turn direction unless there are 3 higher highs. The rotation looks good. So I'm willing to bet on this side. So this little cute go signal is triggered yesterday. That's what I looked at them. This one came like, I don't know when, 20 minutes or 25 minutes when market opened, something around when the candle was around here. That triggered right there. So I was like, okay, I'll take that as a yes. Some this is will be willing to improve. I have an oversold RSI here. Okay, that should give us a little more upside. So I was like, okay, I'm willing to bet. That's why I put a spread on, if you notice. Went all the way up, and it's like, I did it on September is first. I was like, the earnings are out of the way. Okay. Um, this was the earning day right there. So it opened higher, meaning that it flushed out all the puts at the open, and then all the calls got trapped here, made a full reversal all the way back down to this low. And I had this chart in front of me, and I was like, okay, I have this low to this low. I had this previous day low. I was like, let's see what happened here. It's just kind of poked right there. And I picked up those leads right at 385 price. I was like, I'll buy it here. I'll buy a lot of time. I'll just leave those 2 on the board for now. If it's gonna come down here, I'll deal with it. I might just add something later. So it did manage to bounce from here until yesterday, all the way up to 420. So it moved like almost 9.25% from Thursday earning to the Friday high. And now with these tariffs and stuff, it kind of backed off. The point is here is like if you look at a chart, it's very coiled now. Okay. It's not bearish. That's one thing. Um, this is that looks like a pretty well-defined symmetrical triangle. Um, we're just connecting these highs and these lows, but we had this all-time high. So we have a 23.6% swing to the downside. That was the first initial swing. Then we rallied up 17.9 on a second swing. Then the third swing we had was down 12.6%. Okay. So if you notice that the swing percentage is getting smaller and smaller, right? That's why it's starting the price action now is starting to compress. So we have all-time high here to the previous swing high. That was a resistance that we had yesterday around this 420 area. Okay. And that's where we kind of backed off. So it was, I mean, the ideal breakout would be it has to close, and meaning that you need to see an intraday close out of this range first. Okay, meaning that you need a full candle or a bar, whatever you follow on your chart, has to open and close out of this range. There you have your 78.6% retracement sitting right there, 424. So keep that thing in mind. Remember, this has to break. And then from here, we need to see if the price makes a higher high and take out this high, which is 440. So this area will come into a play, but as when we will going to see a bar that open and close out of this range. So that is what we're going to watch. That's what you will watch as well. The downside risk that we have this bit of an air pocket here, as you can see. So we had the initial low, then we had this low, then we had this low, then we had this low. So we're connecting three tops against four lows. Okay. So you have four lows and you have three tops. Price is right there now. It's very coiled. Um, I'm willing to bet on this because I know for a fact that this is not going this way. This is going to improve. So we're going to take a few more days, which is fine. At the same time, I know the swing is down because I have only one higher bar against the 8 bars. So I still got 2 more days I have to wait to see how this price is going to play out. So the high here is 420. So now we need to break 420 to make a second bar. So if that happens, it means that if we're going to take out this high, so you have a very good chance that the price will close out of this, whatever you want to call it, a symmetrical triangle. The price will get out of this range on another higher high, which is 420. The 420 here at this resistance is going to face this area, which is 78.6. Remember the rule of the 78.6, right? It's always going to be a last resort because from here you want to go and take out this high. Then we will project the upside. That what will be the upside that we're looking for. This is the case for the upside. The downside risk, we have this much of an air pocket back toward 78.6 as well. This is what I laid this thing, I told you this is a must hold zone. Okay. And what's happening here? Bounce, bounce, bounce. And you're not gonna break this that easily. Never did, never. 78.6 just don't instantly breaks. Never did and never will. Price always gonna come and take a pause right there. It's gonna fight that area. Then it's gonna clear it. So I got a lot of time. I'm not rushing. I'm not gonna. I'll keep finding and trading other pairs, but we'll just keep an eye on Tesla. As it's the same thing with Nvidia. But we'll watch. We're gonna watch this three lows, and we're gonna watch this. Okay. So on Monday, you're gonna watch 420 to this, and you're gonna watch this must hold zone. Because from here, if we're gonna come down this more, you're gonna have another lower low. Okay. Yeah, if you're gonna start breaking this area here, you have a very good chance you're gonna come right back down toward this low. So this range is gonna break. So let's see how is this stays in place. Okay. Along with this to this. These are the three positives that I can take. Okay. The odds that I would take, and then we'll see what happens in this area. That's what we have left now. This. Our price move from here either it breaks down, either just go right like this. It's so this is what we'll watch. It's just there's nothing really. I have a wave count. Remember primary, alternate. I made it, on the smaller time frame. I mean, we can we can keep those side by side. Fine. Elliot will give you much more kind of detailed, smaller time frame counts. You can get more fibs out of it, but you always have to look at a bigger picture first before you're gonna fight yourself on a 1 hour time frame or 45-minute time frame. Okay, so everything starts from a bigger picture. Then you draw a small picture. A low pole reversal occurred 130. On the Oh, you talking about the aftermarket low on the earnings? The reversal occurred on 130. Oh, I don't know. I mean, it's just everything right in front of you here, buddy. I mean, I don't think this is wrong. The low here was on right there in the banner. I can even do it in a bar. I can just scroll it here. You can read this a little banner right there. The high was 392.73. The low was 373. Volume was 109 million something. So everything is here. It gives you the exact time, date, high, low, open, close. I can a low pole reversal. Yeah, I mean, again, you could make. Yeah, I mean, like looking at a swing is down. I understand that. It makes sense. Okay, you have a stock that is down for 8 straight days. So obviously the swing is down. But how long is going to stay down? But the decline here is not as is pretty like steep. I mean, what can happen? Well, we don't know yet. But if low pole bullish reversal, Well, if that's the case, I mean, we can take this as a go signal with the bullish case. This is intact, so this is in place. So let's keep an eye on this. I don't think it's going to disappear. What's the next one is going to be? Another no-go? That's what it's going to be. Otherwise, it's going to stay in place. So when the go signal triggers, the color of the candle changes, you know? So when it is a go, no go or whatever, it stays at the pink with this. So these they have those colored candles as well. It's just I don't rely on these. I have my own signals that I built that I scripted over the years. I had a pretty good track record on those ones, but I keep them as a just take as a hint. This is not it is a paid service, but for me it's free. So I just kind of plug them in there sometimes. Um, that was just we'll see. I mean, these are the only two I will watch for now. I'm not. Let's see what happens here. If that RNG will improve from there, and if we can get one more push, that will be like a 5-wave decline. That will give another 3-wave push back to the upside. We can draw a B wave like this. B wave typically retraces to 50% of the initial decline. So we can play something as another bounce or something from there. So then from here, B can go as high as 661.8, but that would be due for one more push to the downside. The typical retracement of an ending diagonal and a leading diagonal is always going to be a prior fourth and prior two. Okay. If you read a book, okay, diagonals are very choppy. They're very difficult to trade. The reason why it being is because there's a lot of price overlap, and it just starts to form a wedge pattern. So you could have a wedge to the upside, okay, something like this. So most of when you have an ending diagonal, it's called ED, that forms in a wave 5. Okay, so there's like a bunch of zigzag moves, and and your fourth wave here must overlap your wave 1, and it has to contract. Price has to contract, has to form the wedge pattern. So when you have an ending diagonal that forms in a wave 5, so you coming like this, 1, 2, 3, 4, and there you form that ending diagonal in wave 5 to complete a one higher degree of wave 1. The ending diagonal, first of all, they're very choppy, and most of these ending diagonals form when you have a pretty large kind of third wave, okay? And the price is just went way too fast. The momentum was super strong, and it's starting to form that wedge pattern up on the top. These ones has a very well-defined downside targets, okay, on ending diagonal and leading diagonal. The typical downside, the first target is always going to be a prior fourth. This is a minimum downside target, okay? So that your diagonals originally starts from wave 2, okay? So your second typical downside target is always your prior wave 2. But that doesn't mean that it has to or must hit wave 2. It could stop anywhere. But the point is that if you ever come across a price on a chart that is trying to compress, okay, up on a very top range of the chart, okay, so you gotta have to see if you could be able to make some sort of a wedge, like the compress the price, if the starting to, the price starting to compress. Always look for this prior fourth. Okay. That's where you're going to have your typical minimum downside target on a reversal. Ending diagonals, they reverse sharply to the downside. But there's one thing you have to keep in mind, that the ending diagonal cannot be truncated. The fifth must makes a new high above wave 3. Fifth cannot stop here below the high of this, of wave 3. So they're a little bit tricky. There are some rules you're going to have to follow. It cannot be truncated. Okay. And the wave 5 is always shorter than wave 3. Sometimes it can overshoot, but that doesn't really happen much because ending diagonals hardly ever shoot, because it's just because the price is compressing, it's trying to compress. Then it just takes the sharp dive lower. So same thing with the leading diagonal. The leading diagonal forms in wave 1. So your fifth wave is here. Now you have a wave 1 that forms a leading diagonal like this. So the same thing with the leading diagonal. When you have wave 1, you're going to have the 3-wave decline to the downside. Same thing here. Wave 4 is your minimum downside target. You will see, like I labeled this one here. You see you have 1, down in 2, up in 3. Here's your overlap with wave 1. You see how 4 went below the high of wave 1. And then you have a fifth wave, which is higher than wave 3. So 153.13. So this you see, and then from here you see how market respond, sharp dive lower. That's how diagonals comes down really fast. Then it managed to bounce again, and then it took another hit lower one Monday news, but took out this. This is where I know this low because I watch my swings every day. I know this is the 10th swing. On my Gann chart, this is the 11th swing. So if this would have, if this low would held, like meaning that if this would come down here, that would be number 12. Then from there, the price has to come and make a push to take out this high to make the 13th swing. Remember, we just have to keep making higher highs and higher lows. Now we're not. Higher and higher the number is gonna get, is gonna reverse. I know it eventually it will. When it will reverse, well, I don't know that. I cannot time that move. But higher the count gets, okay, it will come. It is going to take out one of the previous lows. And that's where the swing turn direction to the downside. Remember, the bullish trend is what? Higher highs, higher low. It's a typical 101. So what are you looking now? Higher high. That's the bull trend. So what are we looking at to the downside? That's your low, lower high, lower low. Sequence goes opposite. Lower high, lower low, lower high, lower low. So when does the swing change? When you take out the previous swing high. So it's previous swing lower high. So if the price from here, that's your low, that's your lower high, right? If the price stays here, and if it takes out this high of the previous swing, the swing will change direction. That's the simple concept, the way I can explain you how swing works. All you're looking for, the sequence of higher highs and higher lows, if you're bullish and if you're long the trade. And if the price reverse on you, okay, which nobody knows that because we only trade probabilities, when it can happen and what is going to happen in the market, we don't know that. We trade the unknown. Okay, there's no guaranteed in this business, and there's no such thing exists that you're gonna make money every single day. It doesn't those that doesn't exist. So as long as but the as a good trader, okay, which you will be, you have to trade in the direction of the trend. Okay, you don't fight trends, you ride trends. Ride as long as it lasts. It will turn its course at some point. It's okay, but you ride the trend. You don't fight the trend. You don't sit and this is a low and this is the high. This is it. This is the 15-year high. This is the dumbest statement you could ever lay it out and tell the world like this is the 15-year high. How do you know that? Because you draw two magic lines and think this is the top or this is the top. It doesn't, this is not how trading works. You don't sit and assume tops and bottoms. It's just a dangerous way to trade. I mean, some people call me like I'm like a perma bull or something. I was like, I'll play both sides, but I need a reason to play the downside. You know, I mean, I took it yesterday. I mean, I'm not super heavy on those puts, but that doesn't mean that I'm start calling like this is the top. The market just put up a 15-year top right there. I just don't have signs for it. Why would I even say that? You know, because you have a one five-way move is going to complete and you have another five down. It never happens. I will, I want you to go on S&P 500 if anybody who knows really good Elliott wave. Okay. You go on a 1 hour chart, you can go to a half day chart, you can go on a daily chart. I just want you to show me a five-way move on an S&P 500, and I want you to, and then I want you to show me a five-way move to the downside. I want you to show me this because I'm curious to know where it is. Meaning that you have a five-way move like this. Okay, let's take August low, something like this to complete. Make a one here, put a five here. It doesn't matter. It is totally relevant. You have a five-way move here. What does it have? What happens after five-way move? You have a three-wave correction to the downside each and every single time. Never gonna change. It hasn't been changed since 1930s. Elliott wave is really good because it has the repeating pattern. Okay, so that's why it has their rules, it has their guidelines, but the sequence is it has the repeating pattern. Market is fractal, right? We all know that. So market is constantly repeating patterns over and over again. So what do you, so most of the time, that's all I'm trying to find is matching patterns. What has happened before can happen again. So Elliott wave is the same exact concept. You have a five wave up, three down, five wave up, three down, five waves up. You see, it's just a sequence. Just keep going. Five up, three down, five up, three down, five, you know? So, then it has corrections have more than now than like a simple ABC. My son can count it. Like something like this. Just get done with it. You know, buy some, like look for retracement here, somewhere around here in this zone, 50%, 61.8 to 38.2, something around here. You can just see if you can just go and take out the high of the, whatever the A wave or whatever one you want to put it here. It really doesn't matter. Okay. So you can do that. But the point is like that's what makes Elliott so good because it's very fractal, and it just has that repeating the sequence. You just keep going. But then the question, what it gets very subjective, and that's what a lot of people will lose their mind and just trying to say like I hate this thing is when you're gonna deal when you have to deal with this kind of a nightmare. Simple move like this is is pretty easy. When you have a price goes like this for several weeks, like this, whipsaws, that's difficult. Okay, most people lose money here. This because they're fighting to take out this high. So how is this four is going to go in a triangle? Well, simply is not an ABC. There was a chance that it was an ABC here that you could make a case. Sorry, this one. Then you just made a pretty sharp reversal back to the upside, but you didn't take out the high, the previous high. You failed. Then you made another attempt. Then you failed again. So January was kind of a little rocky kind of month, because there's a lot of whipsaw. Then you have one single week. So you're down for 8 weeks. Okay. Sorry, 6 weeks. And you just rallied for 1 week. That's that's crazy. It's when Trump just became a president. It just took off. Yeah, they killed the Santa rally. People had a very big hope like Santa is gonna come, this and this. They killed it. And they just rip everything right back up. You see like it's crazy. It's amazed me like people want to be so bare and this and this. Look how buyers are coming in this market trying to buying these lows over and over again. Look at all these lows, how these reversals are against these declines. Stay away from Twitter. This year you're gonna make a lot of money. It's all noise. It's all a lot of garbage on Twitter these days. I watch a lot, but I don't say anything. I don't put any comments on anybody's post. Never did, never will. Um, what I was gonna show you. What did I do? I had this thing here. This one. I mean, I laid this thing. I mean, I posted this thing on a Twitter as well. I was like, because this is very rare. First of all, for S&P for the main benchmark, which has 500, it has S&P 1000 stocks. It has several different, like every stock is, I mean, we can go there later. This is very rare for S&P to make 6 weekly lower lows. It happened 4 here, rip to the upside, 4 here, we rip to the upside, 5 here, there was a higher bar here. Then we actually ended up making another 2 lower lows, and then from here we took off. Okay, that's when the RSI went really oversold, went all the way down to 16 on a weekly time frame. So this is like a 10% decline. So market was just literally looking for that 10% correction. So that's exactly what it was. That's where it catches my eye right there. That's what I was like, 6 here, 4 here, 4 here, and 4 here, 5 here once. This is 6. I was like, after 6, there was a higher bar right there. I was like, I was like, okay, I'm gonna start buying. Worst case, I'm gonna deal with another down week. It's okay. I mean, we're already down 6. Worst case, we're gonna go down 7. But I'm not seeing seven. I'm not seeing seven. You have to go so far back. I was like, this low's got to hold, you know. And then boom, we just got to rip right back to the right back to the upside. That's crazy. Like if you this is how I find repeating patterns in the market as well. So you gotta pay attention what I post. So like just buy the damn dip. I was like, what market's gonna go down about 7, 8, 9 weeks? It's like, what is it even like? What is a catalyst? First of all, there is none, right? We're ending the year. Everybody understand that. Is it a tech selling or people are just not there, like dumping things, like, certain stocks or whatever because they don't want to carry over. Who knows who's doing what? It's none of my business. But it was just very rare, for 6 straight weeks of decline. Yeah, 6 weeks is what? Month and a half? 4 weeks in 1 month, right? Yes, week and month and a half. A month and a half. An index is down based on what? What breaking news are coming out nonstop day and night. But okay, this is what it is. Down 5.2, rally 6.1. So interesting reversal to be honest. So we'll see what happens here. Video they looked at. Swing is this is the this is a spy I did. Yeah, I don't really normally don't do spy. Always track the cash index. Um, the swing is up. Um, this is a demand index, meaning like the money flowing in stays above the zero line. This is the eight straight days of rally, gap down on Monday, 4 days in a row. Tuesday, Wednesday was an inside day, Thursday and Friday. So Friday we're right there. So we still ended the day with a higher bar. Now, if you pay attention here, now you're gonna take this low from here. This is what we have, right? So we're just gonna focus on this part. Okay. From this low of 575. So you take 8 days here, 9, 10, 11, 12, 13. So that makes it 13 days. In 13 days, S&P only has one lower bar, which is red from this gap. So 13 days against 1 day. Think for a second. So how can you be bearish? You have a market is up 14 days in a row, making higher highs against one down day. Second is the swing is up, is where you see this black line right there. That's what I put this arrow. You see it turns green. That's where the swing turns up. Okay. So now I put a weave up here from the low to that is sitting at 597. So we might have a down Monday. I mean, the close was okay. It was very close to the low of the Friday. It might have, which is okay, might have a lower open on Monday, which is same. Could this could repeat again with all these tariffs and stuff, gap down or whatever on Monday, and just rips right back up. It just, it's just what has been happening right there. So we have a weave up right there. So you're gonna watch this one at 597, which is 598. Okay, we're out of this channel anyway, so we really don't want to close inside the channel because it was a kind of sideways. Anyway, there's nothing bearish here. A bearish channel, it has a different slope. Remember, I told you before, the selling pressure is more directional. So your channel is going to tilt more straight to the downside. A sideways channels like this, something stays like this. It has a little bit of a tilt to the downside. Doesn't it's just the price is consolidating right there because you have to connect those high and lows. Channel works really good with Elliott. It's a very good technique that the Elliott wave uses, the channeling. So, anyways, so that's the weave up. Now, here's the thing. Remember, I took that thing off. You take the initial swing was 10 days. Then you take, then we had, so we have the initial swing down for 10 days, right? 1, 2, 3, 4. So all the 10 bars, 10 days. So then you had a swing up. You take the high of this swing. Look at this 10, 10. That's the low. Look at the move to the upside. You're not going to find this on Elliott. I'll tell you that. You know, this why these swings they have a bar to bar relationship when it comes to these 3 bar swings. Gann was very good with time. The Ralph Nelson Elliott didn't spend any time on how to time the market and stuff like this. Gann was the one who spent a lot of time with astrology and those planets and all that kind of. So those are the smaller swing, which is fine. That is done. You're gonna see a respond 10 to 10 or whatever the initial decline was. So if we take this high to this low, was 23 days. When you have a downswing, okay, for 23 days, your upside swing should last longer than 23 days. Your upside is always, remember, market has what? Accumulation, distribution phase, then accumulation phase again, right? Typical structure of the market is accumulation, distribution, accumulation. So you're coming back far down here, and you're going sideways, and then you end up making a new highs, right? So you basically moving back into a accumulation phase because you're trying to make higher highs against your lower lows. So the initial decline, which lasted until this low, was 23 days exact, 23 trading days. So your next swing that goes up, okay, it could come down like this as well. That's okay. It should last longer, okay, than 23 days. That's his minimum. The accumulation phase never shorter on time than your distribution phase. Never did and never will. Pretty much. Let's put it this way. Okay. You can look at anything. I mean, you don't have a sideways chop is going to be longer than your upside move. So if I would compare, I mean, I don't know what's going to happen this side. I can only see what has happened so far. But this is why I draw this box here. If you notice, it ends here. For now, I mean, I just left it here because I want to see if market will respond, will give me more than 23 days here, okay, to see if I can just kind of, if the upside, which already has made a new high, willing to last longer than 23 days of the initial decline that we had. That's one thing. So the second thing that I'm counting each day is the days goes by. It's 13 days so far as of yesterday. So then Monday I will slide this thing here. That each day by day I'm gonna move them one by one. Every day that's what I do. I'm gonna just take it all the way here to 23. 23 is on Friday, as a matter of fact. It's just changed. That's gonna be a minimum side by side. So I'll just do this just to match 23 to 23 minimum time relationship between two swings. So because this is Friday and then Monday's February 17th will be the Monday. So we'll see what kind of we have a lot of room to the downside. I don't think this kind of upside is going to get washed out that fast, that quick. But just keep 13 here, stretch this thing back here. That was the high. That's the low. We made a new high. And we're trying to see if this is the wave two. It's going to come down in a flat, made a complex, whatever the case is. I'm going to use this thing as a weave up. Swing is up. Okay. Demand index looks good. Now we just need to see if we can kind of either take a leg lower here and then try to see if we can make a move back up. So the initial target I would say that I would have for now is just being a reasonable side, just using the standard deviation. I would use this 61 618 for now, using this low, this high. So we take this high to this low, because remember I'd see I ended this thing here, not to the top, because I'm trying to play the previous swing with the new swing now. See if the price can make a push higher. Either it's going to take 1 or 2 down days, and then it can make an attempt in the next couple days. So we'll see what happens. So we're going to watch this every day. So we'll see how the 14th day on Monday is going to go, and I'm going to keep sliding this bar. But the point is that we need to match minimum 23 days to 23 days. It's bare minimum. And then from there, we'll see how time plays out. So you can just kind of match, and then we'll just go from there. Okay. Uh, what did you post me? Oh, Utah. Oh, these are those. What do you call those? I forgot the name of this. I have. What's the name of this chart? I have them here. I believe I saw it. Yeah, point and figure. Yeah, I have. I don't really. You probably is high. No, rain chart has the same thing, I believe. No, not the range. Kagi, what is it? Ranko. There you go. It looks pretty similar to this one. These are very good charts. No, yours is different. There's a point and figure. I don't know how to use this one. Yeah, I'm familiar with these Rankos and Kagi. Kagis are very good. Those Japanese. Yeah, these are the Ranko charts are very good. Why? I mean, on a closing basis, I mean, I always prefer this one more than anything. Line charts are the best charts. Oh, geez, what's going on here? Reset it here or what? Oh, Where did I click? Okay. Jeez. Yeah, line charts are always your best read uh, because most, based on the closing basis. You can adjust them, but yeah, I really like line charts. I don't like really use them for trading. I mean, you can, but mostly line charts always gets used for the data. If you notice, because your data don't have any high and lows. It just moves with the price. Depends on the reading what you get. But the closing basis of a line you should always watch by the end of the day, because there's a lot of time when we're in some sort of a triangle in an Elliott wave. I always look at a line chart as well to make sure is that pattern really got invalidated or not. You know, I know the Elliott has rules, but you don't want to fight $1 or $2 move to the penny to make sure invalidation doesn't hit. So let's say if you do this way, okay, I'll give you an example. I just looked it up here. Let's say you do this. Let's say you have your wave one sitting here somehow, and this is your wave two, and then you go up here, and then you're watching this. You see, now here you have invalidation. A lot of time when you look at a chart, the actual candle on a bar chart, right? You don't take out the low. So it like every time I'm doing triangles or diagonals and stuff, I always look at the line chart because it's gonna give me the closing print, okay, to make it just for me to make sure, yes, the wave count is wrong, you know, because if I change this thing into a candle, you see, it's gonna give you the same, you see right there, even now the candle has a high and low. You see where I drew that line? Because it's only based on a closing basis. You could poke above or come whatever the day is. Like yesterday, it kind of poked down here on a candle, and then you go back here. Not yesterday was here, never mind. Like up here, like so like even you look at line chart yesterday, let's do so you mark this high to this high. Just on a line chart. Then you can change the thing back to a candle. You see? See where we close? Right there. That was the close right there, the previous 3 days before. And you could use them as well. They work side by side. The if you I know a lot of you don't have RRG. You can do a ratio chart. I don't know if you ever heard about ratio. When do you think we will have a market crash bigger than 30% in S&P? I mean, I don't see a 30% crash. I mean, I don't know anything had happened, but I I don't think that most people actually pay attention to a bigger picture in the market, that they just more focus on day-to-day noise. If you Oh jeez, I need this. Why is it I gotta kill me with these lists. Oh man, I gotta stop this. I'm gonna freeze my computer. Go back. A lot of data is gonna load. There's all these 100 stocks. Okay, stay here, buddy. This ratio chart here. Okay. If you don't have an RRG, you can use a ratio chart. I don't know if you even have that access. And a big ratio chart is very good chart, but you make sure those ratio charts are a line chart. Okay, don't use any candles and stuff. So you basically what you're doing is you just comparing that this is the same S&P 500 relative, index comparison to the S&P 500 cash, okay, which is your main benchmark. So what you basically do, let's say you take Tesla. So you take Tesla, the current price of Tesla divided by the S&P 500 cash to give you a ratio. Okay, that ratio number is 0.0670. So the price will look the same like as on chart anyways, but this way you could use a 20 period exponential moving average on this one. Okay. The ratio chart is basically will pretty much give you a same hint. You don't actually, if you don't have, well, I know a lot of you don't, if you don't have the relative strength index, sorry, the relative rotation graph, you can use always use a ratio chart. Ratio chart is really good because what you try to do is whatever stock that you have in your portfolio or whatever you're trying to trade or whatever you're trying to do, you can check the relative performance to see if the stock is outperforming the benchmark or is it underperforming the benchmark. Okay, that's what stocks do all year long. They outperform the main benchmark or underperform the main benchmark. So when you use a 20 period moving average, it's going to help you a lot. Okay, so when price will move break above the 20 is when you consider to go long. Okay, so that means that on based on a 20 period, okay, 20 session, you can whatever you want to call it, that the price starting to make a move back up higher, okay, based on that 20, you should use that as a 20 breakout to go long. You can do that as well. The ratio will give you the same relative strength or weakness that if you wanted to look at them, without RG will give you the same thing. So this is just like a same Tesla. Tesla right now is not performing. That's why the Tesla is flat for the year, right? It's not literally outperforming the benchmark yet. It's technically sitting flat. So now if you look at Meta, now if you look at the Meta, you see it has a much better relative strength. It is outperforming the benchmark because this Meta ratio right now is 0.114. You take a Meta divided by an S&P 500. Okay, these are called ratio charts. They're very good charts. Okay, so there are times that our price comes back down, you know, and then you could see now if you look at Nvidia, it's underperforming now. This is why it's down almost 10% year to date, right? Way below 20 is down here. Is it a good buy? No, because it's weak, right? Can it improve? Yes, it will, but it was weak here, managed to go up. That was the bounce that it had. So you could see your stocks, whatever you have to compare it with the S&P. You can do SPY as well. It's the same thing. You can use SPY ETF as well as a comparison, or you can use an S&P 500 cash index as a comparison. Just take a stock and just put them in a ratio, and that will give you an exact ratio value. Okay. Um, Seasonality. Here's the seasonality for February. Amazon just, I have no idea. I've never seen Amazon like this, to be honest. This is this is crazy. This is crazy. Market is good. Nvidia is good. Nvidia last month wasn't good. Tesla looks good. Apple looks really good. Microsoft looks bad. This has looked terrible. Terrible. Amazon. Oh my God. Gonna watch this one closely. Plus, they have earnings coming as well. Alphabet, that one has earning coming as well. These two are tricky. Gonna be watching. Really, these two are really close. Netflix is good. Meta is very choppy this month. It has a little bit of an upside here for a few days. It just goes sideways. Seasonality does plays out. Keep that thing in mind. So if we would do, let's say, I'm gonna move this thing here. So let's compare just to kind of, no, I gotta change. I think I did. So we have S&P, NVIDIA, Tesla, Apple, Microsoft, Amazon, Google, Netflix, and Meta. So if we do this on a watch list, uh, then I'd save this one. The performance. Yeah, so this is one month. You can use this one. So if we take this, now let's see, here today. What the heck happened to this? Come on. Get those bunch of watch list got uh because when you load too much data at the same time, you're gonna put this thing into sleep. Okay, but I don't want to ruin my chart now. I'll do it on the other side. Well, you know what? As a matter of fact, I do have them here. There's a 1 month, anyways. So Meta, we can actually go site. We can do site. We can actually see it here. So you don't have to go there. Move this one down here. This is the current month. So I can go side by side with the sector as well, just to kind of see which one looks good for this month. Okay, so Meta, it's gonna change here. See, Meta is, wow, it's flat. It's very, very flat. So the seasonality, the monthly is from, I do everything. There's a lot of people, like some trader, they only use 5 years of seasonality. You can use 10 years. I use pretty much, like, it's called everything. You could go, I could do today's, yesterday, last week, fortnight, last month, quarter, 5, 10, 15, date range, whatever you want to do. I just do everything. It's gonna just gonna take you as far as back, you know. Yeah, Meta is kind of dead this month, but this is what you gotta watch. Okay. So these some of these seasonality does play out really good. Um, then we have Netflix, slow start because it's been as you we did I think, yeah, we did traded that Netflix. Um the Yeah, it's been close to that $1,000 print, you know. So there There are two prints you gotta watch: Meta 700 level and Netflix 1000 level. Okay. Yeah, this is where I think I don't know. I was thinking about like putting a butterfly on Meta around like 700. It's right there. That's a huge monthly bar for Meta for January. But there's no low. Straight up. Very strong close. Yeah, this gonna watch this 700, 710. Just trying to see 690, 689 right now. I'll see. I might put like a butterfly here close to like 700 mark for next week just to see if we can, if it kind of goes sideways. Or we can do for a month as well. Collect some time decay for like 2 weeks or so, then close it. You can do monthly butterflies are like 16, 17 days of data that you could try to collect, you know. You can always adjust them. I used to trade a lot of butterflies. I kind of slow down more into a directional trading now. Um, Netflix kind of slow start, but looks good for the month. Yeah, bit of an upside. Amazon looks bad. What the heck? Oh, this is brutal. It's a brutal month for Amazon for some reason. You gotta watch this earnings really good. Just looking really kind of shaky. Amazon is gonna go down. It's gonna drag the XLY. I can tell you that for sure. This is the top leader of XLY right there. It's up 3.49. Tesla is the second largest holding of XLY. You gotta watch Amazon. Google looks just, oh man, these two the earnings are coming up as well. See, Google has a rough February as well. Since 2005 to 2025, that's the average. But S&P is good. S&P looks good. But you see just looking pretty, it looks good, but looks kind of choppy compared to January, you see? Look at the size of this on on um, on the average basis. This is the January we just had. Okay. So the current growth was 2.93 compared to 2.70. The little diamond thing that you see right there on the screen, that'll give you exact reading on this scale because I made it pretty small window so I can fit everything here. Um, so it was a good January. You shouldn't be talking anything bad about it. I mean, it's a beautiful upside move. 2.93% for 1 month. January looks very flat to me. You see it average, oh boy, 0.11. Yeah, January, February looks very choppy. If that's the case, that is that fourth wave that we're just talking about, it's gonna go in a triangle. It's gonna be some sort of a triangle. If this month is gonna go sideways, it's gonna drag sideways for a while. So I wanted to see if just gotta keep these are the things you have to keep it in mind. Like we're starting a new month, what we can expect. Well, what can happen? Well, nobody knows that. But what has happened before is that's what we can see on the screen. So February definitely doesn't look as strong as January as we can see, right? So it's very flat. Even the fact that we do have bit of a spikes and things like this, but but on the average basis is a very, very flat month. It picks up in March. Okay. I think neutral approach on February is the way to go. I don't know. I have the port. Um, I might, I might make a diagonal or something for a month and leave it. If market kind of goes a little more sideways and stuff, we can do like 6,000 or something, whatever. I have to look. But like a wide diagonal, let the price kind of bounce around here in February. March picks up. March is good. That's where the first quarter will come to an end. Um, Tesla looks good. February has a pretty no, this is not right. This is not right. It's a flat. I need to do something. Hang on. Oh, do it weekly. This is not right. 6.6. Is it measuring? I have to probably have to wait till Monday to because the month end yesterday. It might reset. Stock is flat for the year. I think it has that yesterday move. I think it's just measuring that spike that it has right there. Oops, no, on a smaller time frame. I gotta wait on that one. Microsoft, no. See a lot of these techs like Amazon, Google, Microsoft. Uh. Apple is good. Apple is good. Apple, let's see. Apple 5.76. Well, definitely seasonality based on seasonality is opposite. As a matter of fact, Nvidia looks pretty badass. February is higher, those average is higher than January. Yeah, 13.19 because that was the 116 low. It closed at 10.59. Yeah, some of them they plays opposite. So let's see how the sector looks like. Healthcare looks okay, down for February. Did I change this thing right? Yeah, this is February right there. Oh, okay. Sorry, I'm just kind of confused. Okay, this is monthly. This is the full 1997 to 2025. This is everything. So that's all different time frame. This is the monthly on a month-to-month basis. This number you have to look at these dates, the years they appear. So yeah, this is monthly. I don't know. My head is kind of like this is monthly. I don't know why I'm so confused. This one right there is everything. This one right there is year to date performance, how the sector is gonna, is performing for each month. So it calculates here. This is the monthly, and this is the current month that we're gonna track only February from day to day basis. Okay, I hope it makes sense because I have them on monthly. That's what. Okay, yeah, okay, that's good. Yeah, this takes the full average far back from 1999 to 2025. This one will track pretty, the same current month. Um, this one will track the same current month. This is the one that was before. Jeez, I have things upside down. Financials. Oh my, financials are ripping. Uh, I don't know. This February to me looking very choppy, to be honest. I don't know what's gonna happen, but we'll see. If should we go neutral risk, more try to play sideways price action? Well, some of you cannot trade spreads. That's another problem. Gotta help me out here a little bit. XLY. XLY is good. Yeah, this is where we have a lot of stocks. Oh boy, utilities are rough. Energy is okay. Energy closed the month with the inside month. Real estate is, yeah, February is not looking very bullish. I can tell you that. Mm-mm-mm. Technology even takes off, it kind of backs away. Yeah, see, if you, this is very, I mean, seasonality does play on its own role in the market, and I'm pretty sure there's a lot of guys trades like the you can make a good calls, um, or like point a direction, to like to position yourself based on seasonality. There's a lot of guys I think that do that. So by looking at this, if I have to say like what do I expect for February, I think neutral risk is the way to go. Let me see. Like, yeah, this is very flat month. It picks up in March. Oh, we're gonna eat. We have to eat our steak. I'm not gonna wait till March. Trying to make something. So we gotta work for our steak money. Yeah, I'm not going to freaking McDonald's. Um, we'll see. Okay. I don't know. I mean, Tesla, that's fine. We have that. We'll swing few trades, but I'm gonna be quick on those. Just keep that thing in mind. Okay, here's the thing. Look, during the day, I'm more focused on swing trading. I have my fibs, right? So I do kind of like take a screenshot, then I'll post them. So like, hey, put your price alert right there. That's what you have to do is just set your price because I use price alert all the time. Okay. Because I cannot sit and stare at charts. I have so many things to do all day. Price alert does all the work. Okay. Those are the targets. Your price target hits, which as you can see, we hit a lot of them. Exit the trade as quick as you can at the target. It popped another 4 or 5 point. I don't care. You out. Okay. We book our. If I set a target and my target hits, I'm out of the trade. Stock can go up another 4 or 5 points. It's gonna come back down in another day or two. Which I know what the next fib is gonna hit that price if it's gonna go there. But that's not the point. My target hits on my trade. I'm out of the trade. Spread. Pick two strikes. Close it. Single call. Whatever you have. Just close the trade. So we'll swing some few short trades here, there on. two, 3 points, you're gonna swing something, that's fine. But February to me is just doesn't look a monster month. Just does not look it. Doesn't look like it. This is, jeez. Let me see what the heck happened here. So January, yeah, okay, so 8.34%. So this seasonality definitely played out really well for Amazon. We gotta watch their earnings. That's a good bar close, new all-time high for Amazon. Amazon definitely need to outperform, like overcome this. Um, um, this is rough. How's March? March is good. Yeah, it's very good. Yeah, this market picks up good in March, as you can see. All the stocks like um if we get weakness in February, oh why I'm a buyer. I'm a buyer for March for sure. So either I'm gonna average something down in February to buy 2 months of time. Look how strong April is. Is to see if this month weakness. Sorry here. Okay, I'll try to take advantage in March as well. So we'll see how the month, because the thing is this month is short as well. So the time will move fast, you know? And plus we're gonna have 17th, the market is gonna be closed as well for President's Day. So we're gonna lose one day as well again. So we're gonna have third week is gonna be the short week of trading. So what are the action that we have? Same thing. So same thing. Earnings fine we have. Now first thing we're gonna have what? Job report. Same thing about inflation, blah blah blah. Then we're gonna have a CPI. Then we're gonna have a PPI, you know. So we're gonna have all those three sessions along with all these earnings. That's all we have. Then on top of it we have tariffs. That market just gonna have to chew those. So tariffs first, that's what market is going through right now. Then it's gonna lead us to a job report. Job report will along with earnings as well. And then from job report goes to the CPI. CPI goes to a PPI. Mm, that's it. And then the third week is a short week of President Day. Yeah, I would, okay. I'm just trying to think like, should, well, it doesn't mean that everything will play out exactly what it is, but averages does, but a lot of um, people like they're looking at the previous months and how the index performed. That does give you a lot of a good clue as well to what to expect, because remember market is fractal, right? So yeah, definitely it could outperform the previous year or a month or whatever, but it can, at least you can look at the average. That definitely gives you a pretty good hint. So a little bit. I mean, I would try to stay a bit neutral, to be honest. But plus we'll just watch the event to see how it goes, and I'll find trades. I'm not worried about that. I'll swing trades either way. Not gonna force it, but I'll find trades. Oh, okay. Oh, you want me to do a screenshot? Yeah, we can do that. These are individual ones. Yeah, we could do a max 7. I have them here. These are one I kept it separate. So we can do this copy here. I can actually do it right now. Max 7. I, I could do indexes, and then I have to make them. Okay, it's there now. We could do, I mean, I went through those. Can just do it one by one. So, um, anything good? Let's see. Let's do, you want to do 50 stocks or 100? Let's do 50. Let's see what is moving. What do we have yesterday? So these are the 50 top stocks of Russell Dow 50 index. Remember, Russell has 2000 ETFs, right? It has a Russell 50 index as well that tracks the 50 companies. What do we have here? I'm always looking at something that is in the lagging quadrant, is willing to make a move higher. So NVIDIA is way down, is rough. Broadcom is down here. Apple is far back here. That's your Tesla. That's your Abby. AMD is fighting. Oh, but AMD is going to come out. Now, remember what we're looking for? Northeast direction. RG direction. I have it all scripted here. I'll give you exactly what the angle is and where this thing is heading, in which direction. So we are looking for what? Northeast. Northeast, we have McDonald's, Eli Lilly, and Disney. So we have three stocks: McDonald's, Eli right there, Eli Lilly, and where's the Mickey Mouse? Where the heck is Mickey Mouse? Right there. So we have this one, Eli Lilly, and McDonald's. They are the ones that are heading northeast. That's where we wanted to go. Okay. Big Mac is flat. Eli Lilly 5, and then Mickey Mouse is only 1.5. On a lagging quadrant, we don't have anything that is northeast. Rest of them, this is all weakening. These are all leading right now. They will be all going eventually toward the weakening quadrant. So a lot of these leading ones, the moves are done. You're trying to find something that you could buy. The weakness on the way up is what you focus on because you want to play this rotation, right? Because here, security will be pointing toward the weakening because it already completed that course. So slowly it will start to lose momentum. We want to focus here. I did this in manually, and we want to try to stay a little far away from the center point, which is the main benchmark. So this way we can find alpha. I don't want some dead peer. I want a stock that moves. Better the alpha is, more money we make. So further away the stock is from the benchmark, bigger the rotation it could make. So these are the three stocks I'm gonna watch. Or so we can go to McDonald's. Yeah, McDonald's is this definitely. If this rotation plays out, which I mean, hopefully it does. Just trying to see if we could. I have a trade open at McDonald's. If this thing plays out, this is 1, 2, 3, 4. And see if we can try to make that push out of this. McDonald's looks good for a breakout. It's a good bet to make, right? So as long as this comes into a play like this, yeah, sure. I don't know when they report earnings, but it might be earning push. Never know. Eli Lilly and Mickey Mouse. That's that thing really that I would really wanted to chase at the moment. Amazon is down here. Amazon is where the heck is that right there? Oh boy, Amazon looking rough. I hope it stays here. We're gonna watch. Rest had applied this. This is weak. This one took a big hit. Pfizer, Texas Instrumental, Nvidia, bro. I want to buy. I want to buy this. Broadcom. I love this company. They're gonna. You have these two leaders down. Well, your semi is not gonna move anywhere. These are the top two leaders with the market cap as well. You know, these two down. I mean, how are you gonna lift up the entire ETF? AMD ain't gonna do nothing right there. It's terrible stock. Where's AMD? Jeez, non-stop lower lows, non-stop. I mean, you really bored, and you really think that this can make, but this just has too many downgrades. It has a yearly lower bar as well. Keeping in mind for the year, the stock is technically down. Is your upside is going to be very limited unless whatever the CEO of the year can promise it can pop. This is starting to compress the price. That's what I see. See, this low is different like this. You see how it could come down, try to make another low, but watch watch this price. I had to move price marker right there. Watch this 125 on AMD. That would be your if the price made a reversal. That is going to be a minimum upside target, 125. Okay, it looks like a wedge. Started because you see the shape is trying to the price trying to compress now to a wedge form. It's gonna reward. It's gonna pop one of these. But if the rotation comes into a play, which is not, you see, it's pointing here. My pig might make another low. Yeah, this is not helping. Okay, let's see one more and then we're gonna be done. This is 50. Let's go to 100. We can do 100. Now I don't want to do 500. It's gonna be way too many. This is solely loaded up. This is S&P 100 stock. This is the one I watch pretty much every day. These are the stocks. These are 100 stocks here on this. Yeah, we can look at the MST. It's just the MSTR. Just there's nothing there to be honest. I'll tell you why. Okay, so what we can find out of 100 stocks? Northeast, 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 Nike. Let's see if anything in a lagging Northeast. Boeing. Where's the Boeing? Right there. I have a trade on Boeing working. Okay, it's right there. Boeing is in a lagging quadrant heading northeast. So we have a Boeing here. That's all leading. So we have a Boeing here and we have Apple here now in a lagging quadrant heading northeast. Okay, I have both. I have a lot of risk on Apple. I wanna open more new trades for the year, which I will. So be patient. Apple. Okay. And then on the improving side, we have same Mickey Mouse because the 100 will carry over those 50 that we just looked at, and then we'll add 50 more. Kraft, Lily, fine, McDonald's, yes. That's another one. Altria Group and Nike. Yeah, because these are the carryover from the 50. Yeah, I kept this one as a small one. This just has a much. These are the ones are bigger market cap companies, and then it fell these 50, and then we'll add another 50, right? Makes the 100 index for the S&P. So it just adds 50 more here, just kind of gets more bigger. We can look at something here just on the, let me see, make it bigger. Make it like a little bit more bigger. Yeah, the video gotta wait on these. I know a lot of you guys love this stock. Gotta wait it out. Honeywell. Oh, this looks, whoa, this is something to watch. I would connect it here because that's the high right there. Kind of range bound as well. Okay, move up. Jeez. Okay. Downside risk as well. Looks very choppy. Let's see what the, oh, it's in a fourth swing. Yeah, there's no overlaps and stuff applies on GAN swings. It's not like, hey, why this fourth wave is below the wave one high. It's not, those rules doesn't apply on swing trading. Swing is different. As long as this fourth swing stays above the second swing low is good. It's just looking for a fifth swing to the upside. Uh, I don't know if they reported earnings or no, but yeah, McDonald's have it. This we could watch. I'm not a very big fan of AMD. I'd rather buy Broadcom. Love that stock. Abby made a pretty big pop, I think, yeah, yesterday. I think it was trying to fill that last earning gap. Abby. Yeah, Abby just kind of little is good, but you see like the price, all you try to do is that it gapped down huge, right? And then it just kind of went sideways for a long time. So you could do this. And then on this, I believe they have earnings or whatever. And then it got another pop to the upside. So basically, what it's doing is trying to close this gap, but now it left another gap to the downside on earnings. It's very hard to find a direction on a stock like this is because it's trying to press toward the previous gap, but then it's leaving the gap behind. You know, it's just, I don't know, what's very range bound. And I want, you have to look at this way. You want to trade something, okay? You want to trade something like this, a trend that resume as a direction, like you see, more directional, right? See when you have a channel like this or whatever you want to draw, like you see how it looks, angle, like that's what you call a trend. But when you have a price that goes like this is very hard to trade with options, you know, very difficult. So we talk about alpha, we talk about moves. This is what we want to write. So me, like personally, like what I always look for is I look for the initial swing, and this is where I want to buy the weakness because I'm always looking for those wave two entries, always, because I want to ride this third wave. It's what you call this is what your money wave is. This is the largest wave of the trend. This is where you should be focused on, not this or this. And then you have a final push here in the fifth wave. There's going to be a final that you have a secret. But that's not the point. The point is this: either is a GAN 1-2 swing or my wave count 1-2 wave. This third, you should be, as long as you're going to be trading, this is your number one priority in trading is to catch a third wave. Okay. So you basically what it is that you have the initial swing. This is the low right there. This is where you want to ride once you take out this high. Okay, whatever the low is. So you have to count 5 waves here and 3 wave down here like this. So the point is like I don't need to do Elliott to be honest. I can just counting in my head. I can just count this thing in my head as one, as two. That's it. I have my high here. This is my support right there. All I'm trying to do is trying to find an entry and see if I can play this breakout. That's your third wave right there. Then I can apply the rule because I know the third wave cannot be the shortest wave, right? We know that. It cannot be the shortest wave. This model right there of trading, okay, I mean, I'm not going to style your trading. I believe you're here because how I trade and what I trade. Or you'll be trading with somebody else. But people have different styles, which is okay. There's nothing wrong with that. But that's what makes every trader different from everyone. You know, one has a one style, other trader has a different style. I might have look at things differently, and you might have a different opinion about it, which is okay. You know, people have different opinions. There's nothing wrong with that. That's what the debate we always have as a traders is I see something, you might look at things different way. I'm gonna be like, you know what? Yeah, it does looks kind of interesting, you know? But I have experience for a long time that gives me a little bit of an edge that I've been through hundreds of different patterns and thousands of wave counts, you know, over the years. So then you just have that practice and the experience, and that just pays off in the end. That's just like years and years of work. You'll get there as well one day, but it all depends how many hours do you spend in front of a screen. Yeah, if you just swing in trades for 2 3 4 hours and then you just say like, okay, if I, that's not trading. That's your hobby. If you just, and which is okay. People makes money as trading as a hobby. If you want to be a full-time trader, yeah, you gotta. Well, I mean, I know some of you guys are. Yeah, you gotta spend a lot of time in front of a screen and come across, and Elliot is a little bit more complicated, but you could definitely like look for some patterns. Fibs, everybody, you guys have the same thing. Fibs are not just high and low, draw your fibs. Those are different, but different swings, highs and lows, those are different. Like take because a 1 hour high and lows will be different than the daily time frame. You know, like you go here which 152, I'm pretty sure you're going to see the same 152 on a 1 hour chart as well, right? But oh God, these split stocks. But the thing is this, that if you go here to the 1 hour chart, you could play this swing as well, you see, from here. So you can just take this low to this high to down here. You can play this, you see. So you can do this on a 1 hour time frame. Then when you go to a daily bar, you just only have one daily bar. What are you going to do there? Because you're expanding your time frame. So yeah, those lower and lower scale that you're going to come down to a time frame is going to give you more data, but it's going to give you a lot of noise as well. So that noise that is going to affect you to make more quicker decisions because now your position is melting and you're getting a panic attack, right? It's just just the time frame is very important for your trading. You have to pick a time frame is what works for you, and you just have to give time for the position to play out. I have a position open for 2 months out on time, and I have a guy sending me a message, are we still holding the trade because the market is down? Why am I buying 2 months, first of all? Or if the stock down like 3 4 points, are we still holding it? I'm just like, okay, well, I don't know. I just get confused over like, what do you expect? Like, this is your entry, and this is what is going to happen in the next 2 3 hours. I mean, I mean, what do your expectations are on a trade? Very high, or what do you expect? Yeah, like you just want this entry and this ride. Well, it doesn't work. I mean, it can, but what are your odds? It's just it's not. Trading is hard. Ask me, I'll tell you everything. I've been doing it a long time. A MSTR has a double inside month. Okay. So this price that it just I'm neutral. They don't really not doing much on this. It's just 2 months, which is January ends here. December, right from here. This is 2 months of price action. Basically, I'll cut it here like this. Okay. These are two inside months for this stock. So when you have an inside month, it is pointless to even trade the stock because there's no direction. The stock is not making a new high and it's not making a new low. It's just a neutral. It stays in between the high and lows for the previous month and and a month before. So inside days are considered as a neutral bars, neutral month, weeks, whatever you want to call it. Um, the upside break for MSTR from here is 404. Downside risk the stock has right now is 300. This stock is literally glued to this 3 year high of 333. Just sitting there for, like the price is just nasty. I've been looking at it going like, screw that. I'm gonna trade this nightmare. I'll just hold the shares. I'm not planning to sell anytime soon. I think it has potential. Worst case is gonna come back down. I'll buy a couple more. I'm not worried about that. But how do we resolve, like, how does it have, like, Bitcoin can catch a break, or this guy can give this stock a break? Because every single day he's buying his bonds. It just, I mean, I don't know, like, is it all his convertible bonds that he's buying that he's trying to average his position? That is not why the stock is not running, because he's trying to buy low as possible, of course. Nobody's going to buy high. Nobody's going to buy high, right? So is he probably adjusting his position over for the last 2 months? It looks like it because every other news, like, and just why he's just keeping the stock flat. So it's the only thing. I mean, there's nothing we can make out of it for the last 2 months because we have two neutral bars. So for February, what we can do is we can last bounce. We're just right here from 320, 322, which is the 78.6. It's a very choppy little bounce. It's just a reverse right back down. So we gotta watch 300 and 400. That's the only thing I can say at this moment. There's nothing. I'm trying to make a case here of 1, 2, 1, 2, and then we should try to see if we could make this move up higher. But that depends on a coin. Well, coin and MSTR pretty much work sideways. So it all depends on the Bitcoin. But Bitcoin is not really. I mean, it has correlation, but is not as it that these stock doesn't really have a very strong correlation with the Bitcoin, because there's a lot of days and weeks that we see Bitcoin rally 3, 4 thousand points, right? And MSTR like 10 points to the upside, you know. So yeah, those 4, 5 thousand points, you comparing a $300 stock to a price of over 100,000. So that 2, 3 thousand points is nothing. It's based on the percentage is going to come out the same way. So last year, yeah, the MSTR had a pretty wild run. Is it taking a some sort of breather? It is possible, you know. But if we look at a price from the all-time high here, there's nothing bearish I see, you know. It works. I mean, I kind of look. I I have. You can do this. Okay, that is one possibility as well. But this area has to hold, for this price to make a move higher. So there's one pattern we can make as well. So again, cannot make any calls on inside months. The two in a row, not one. So that's all. This is nothing like not going anywhere. Um, gosh, stop this recording.